Good morning, traders. Chris Buzz here with Traders Profit Compass with another edition of Before the Bell for Friday, October 14th, 7:01 a.m. 7:01 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Wow. What a reversal in moonshot yesterday. That was incredible. Let's take a quick look at futures and then we'll dive into the charts. Bitcoin popped back above 19,500. Oil's down about 1%. Everything else is kind of just taking a deep breath, flat as a pancake on equities. Of course, at 8:30 this morning, we've got retail sales. And then at 10 o'clock, we've got University of Michigan consumer sentiment surveys. Also got a lot of big banks in focus this morning on earnings. JP Morgan, Morgan Stanley, Citibank, Wells, PNC Financial, First Republic. So now the pedal hits the metal on the earnings. Remember, it's not what they report or say. It's what happens to the stock, right? As technical traders, yes, we can be, aware of companies that are fundamentally doing well, fundamentally doing poorly, etc. But we've seen so many times, in our experiences where somebody will hit the cover off the ball and the stock will go down, and then somebody else reports the biggest junk quarter in history, and then it rockets up. So it's totally a flip of the coin. I will say if you get earnings upon earning revisions lower, then your fundamental analysts will start downgrading stocks and taking down their estimates for earnings, etc. And then, of course, that changes the multiple on the market, all that stuff. And if there's a lot of commentary around recession fears, which is driving their earnings revisions lower, then that'll have a bearing on it too. And also don't forget about those FX charges that I'm sure are going to be out there. But as we head into this season, and I'll do as good a job as I can to give you a heads up, but the earnings season is going to produce a lot of gap downs, and those set up great for second day bracket trades, where you can mark the high and the low of the earnings day, and then that will either produce a gap below price or a gap above, and then from there it's either gap and go or fill the gap. So there's a lot of really good earnings opportunities there. And what I will tell you is with so many companies reporting, you can create one of those lists that quickly have 100 names on them. You'll just have to decide how to, what to focus on, what to let go. Certainly if you have a favorite name or whatever that pops up on that board, you'll want to include it. But suffice it to say, those are going to be some great setups for us. So I got a lot to go over this morning, as you can imagine, so let's plow ahead. I'm not going to spend a lot of time on our ancillary charts, just make a comment or two. Dollar was down yesterday, but trend is still clearly higher. TLT, what were we? Down 1%. Main trend clearly lower. So from that standpoint, dollar higher, TLT lower, Fed going full blast on that hot inflation print we got yesterday, hotter than expected. They're going 75 in the first week of November, and they will either go 50 or 75 the second week in December. So the main fundamental overarching 200,000 feet picture is they continue to take liquidity out of the market, and you can see that with a rising dollar and a falling TLT. So as great as yesterday was, counter trend, right? We're in a downtrend. We'll look at that in a second. VIX down, but only down 5%. Still clearly in the range between 37 and our support band here at 2930. So that remains in place. We talked about Bitcoin popping up above 19,500, kind of emerging above this downtrend line that I've got here. You'll have to decide if you're going to try and trade that emerging rally or let it go. Use your Bitcoin proxies that are out there. Oil had a good day, up 2%. Came down here. We had talked about this 38% kickback rally. Came down and held the line here at the 20, and now is back above this pivot point around 88. I've got some energy-related equities to show you at the end of this segment, so stay tuned for that. Oscillators reversed, went up. So now what we got to watch is for follow-through on our equities to see if we don't get like a relief rally that flashes up to overbought on our oscillators. Right here, they don't really tell you what's going to happen in the future. Only at the extremes will it there are enough people in the boat, either long or short, to make it worthwhile to take the other side. So I think the most important thing we can take away from the oscillators is simply a change in direction, and now the door is open if it wants to go up and tag our positive 60. Here's McClellan on the NASDAQ. Same thing, got the reversal, but right in the center of things. So now let's get into the meat and potatoes of what we do every day. SPY daily. Monstrous reversal candle. Somebody said that was 5.3% off of the intraday low on that inflation print. We took a big leg down, scary pre-market, scary first half an hour kind of thing. And then we started to reverse, and we moved all the way back up to recapture this 362.50, which was the June low. So I thought that was a significant technical event to recapture that level, because as long as it stays below that, what you really have is a breakdown and a back test. But as long as it can hold 362.50, I think the longs have reason to hope that we could see some follow through. Also recaptured the 8 EMA. Now, if you're not familiar with bullish engulfing candles, you can quickly Google that and get a kind of a more thorough understanding of them. But basically is when the price action engulfs or envelops prior day's trading action, which, you know, all these bears have been, you know, captured, if you want to think of it like that. All these people know they're wrong, and so they have to cover. Now, a good thing to look for, it's not absolutely required, but the thing to look for today is follow through, right? I think most of this was an offsides positioning, short covering rally. We already know that price is in a confirmed downtrend. We're still below trend. So what we really got to see to start amping up our confidence that there could be a bigger short-term rally is to break above the downtrend line right here at 370. And you can see that 370 lines up real well with the top of the hourly downtrend channel, right? Here's our downtrend channel. Here's our low side, our midpoint, our high side. And so if you think about it, we just had a rally first part of October, break back into the downtrend channel, make an excursion to the high side of the channel, get rejected to the low side of the channel, have a fake breakdown on that news event, but then quickly recapture the bottom of the downtrend channel and then break above the midpoint. So all along the way here, you recapture the bottom of the channel, you recapture the midpoint. That leaves the door open for a move to the top of the channel at a minimum for simply a tag. That could happen today, that could happen Monday. Of course, if everybody decides to sell this afternoon or anytime, and you come back below the midpoint of the channel and go back below this June low at 362.50, then that will make that look like a fake breakout, and then the door would be open to lower prices again. So in my mind, 362.50 has to hold, and our first objective is to come up, fill this gap, and tag the top of the channel. Now, if we were to break out of the hourly downtrend channel, then that bodes well for an extended move higher. You'd have a breakout of the hourly downtrend, and then that would open the door for higher prices. Now, what I want to do is, I hope you handled yesterday well, but I want to just give you the mechanics of the trade, and they're pretty much all the same. Here was the close on Wednesday. We had the scary gap down, right? That's the first candle of the morning. And what do we say on a gap either way? The first thing you do on a gap down is mark the top of the candle, right, to mark the gap. If it would have been a gap up, you mark the bottom of the candle, and you set an alarm there, because if price goes above the high of the first candle, that means you're in the gap. And one of the basic tenets of everything we do is gaps get filled, right? Here was an instance where it was gap and go. Gap down, keep going. And that formed a gap that remains. So, in the morning, your first opportunity to buy was a move into the opening gap. What gave you an additional clue here is recapture of the bottom of the trend line, right here, right at about 352.50. Your third opportunity to buy was 357.50 at the recapture of a well-defined resistance level here. And then your fourth chance to buy was on the recapture of the June low at 362.50, right? And all along the way, whether you bought down here or at any point, because it was a trend day, there were no scary candles to potentially shake you out. Now today, what I think is key is getting above 367.50, which was the top of this line of resistance, and then fill this gap up to 372.50, and then hopefully break out. Same kind of price action on QQQ, except here we need 270. We need price above 270 to recapture this low. So from this standpoint, yes, the reversal was dramatic. Yes, we've got a bullish engulfing candle, which is hugely positive, but we've yet to recapture this June low at around 270. And unless we do that, if this were to get rejected here and then roll over, you would view this whole big event as a back test and a fail, right? Because it couldn't get back above this key level. So for today on the Qs, I think this 270 is really, really important. And you can see that at least the way I've got it drawn, it lines up well with the top of the downtrend channel. So for today, get this breakout above 270, get some follow through, get above 272.50, and then the door is open to fill this little gap here. Well, it's not so little, it's almost $5 right here between 275 and let's call it 279, 280. Come up here, then that will be a bigger line to get through. Support, resistance, 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 support, support, resistance. So that's what I'm hoping happens today. Moving on to IWM, this one was different. Well, I will put it like this: the June lows never broke. Right? Here's the June low right here, and I think we've actually lined that up on the weekly chart as the pre-COVID high. If it's not the pre-COVID high, it's within $1 or so. So we still had the big move down, but in this case, it was a situation of you got to buy support. Support here. You had multiple days of support here. They couldn't break it. And even on that panic opening, they couldn't buy it. They couldn't break it. So you had an opportunity to buy. And now we're up here, back above trend, testing the 20 EMA. So let's look at it more detailed on the 60-minute chart. And here you see it. You had an undercut of 164. Down here, the recapture of 164 was your first opportunity to buy. Why? Because that was the low, and that was re-entering the $6 wide trading range. So we dropped down below, we recaptured it. Your automatic default target is to go to the far side of the box. You had a chance to buy at 164. You had a chance to buy at 165, 166 as it entered the gap. And then you had a chance to buy at 167 at the midpoint of the box. And all along the way, those would have been winning trades. Now, it's all simple in hindsight, as trading often is. Well, I should have bought here, could have bought there, could have bought there, could have bought there. You don't know all this is going to happen. That's the touch and feel of trading. That, hey, short squeeze, everybody's off sides. We just got a disaster inflation print, and now we're off to the races. From a mental standpoint, your first key, you go off your technical keys, recapture of the low, moving into the gap, taking out resistance. You don't know you're going to get another X number of points. You take it on faith that you're moving higher, and you move your stops right along with it, because price will eventually reverse and take you out. So let's move along to Meta. Not as strong a price action, but the same kind of price action in general. You had your first opening candle. We dropped below trend. We dropped below support. We moved into the gap, and then we recaptured the prior low and the bottom of the downtrend channel here at 127. Now we're at 130 with a first target above 130 of 134 down at the bottom of this range. And if you were to break 134, then you anticipate at a minimum going up to the top of the channel for a tag, and or to the top of the box at 142. So 130 is your pivot this morning. I'd like to see this little gap filled and then break back into this $8 range if we can get above 134. Apple, same kind of price action. Moved scary first bar, moved into the gap. Here it took a while to get going. Notice that it took an extra hour because we moved up to the opening gap, and it just hesitated there. And then finally moved into the downtrend channel, recaptured this low. That was a buy point. 140 was a buy point at the midpoint of the box. Then you got the completion of the measured move. What was that? Re-enter the box, target far side of the box. Now the key for today and going forward is holding this 142.50, 142 area, stay above the midpoint of the downtrend, come up, fill this gap, and then tag the top of the channel. I would be very pleased with a move up into the 145, 147 range right here, depending on when it got there. And then what the bulls are hoping is for a breakout above 147 that fills this gap and then fills this gap up to 152. And if that happens, that would be a nice technical rally. And then there'll be places up here where we can look to reverse for after this, whatever this kickback rally is, calms down. Tesla, I think, was generally weaker, just for the simple standpoint that we came down to the bottom of the channel. There were good opportunities to buy, like at 210, 212, right on up. But now, where you can see we're at significant technical resistance right here at 222, 222.50, and we've got a band of resistance here up to 225. And the problem with this one is 225, depending on when it gets there, is going to be the top of the downtrend channel, and you'd expect some hard resistance there. So in order for the bulls to really extend, they're going to need to break above the hourly downtrend channel and then break back above 235. Coincidentally, 235 is your main pivot on Microsoft. Really nice technical action. You had a clean first bar. You had a clean gap to fill. You had a clean line here from our prior measured move right down here to 227. Broke back above 227.50 and then right back up to 235. And you can see how important a level that is, because we've got a lot of trading right here between 235 and 242 with a gap to fill up to 247. So what I'm looking for is for 235 to hold, go up to the top of the box, this box here, at the bottom of the gap, and then fill that gap. And then that would be a great result, because you can see over here what we've essentially done is broken back in to a big value range where the top of the range lines up pretty well with the top of this unfilled gap. So I like Microsoft above 235. Amazon, I mean, you could have made some money here on this this price action here, but relatively speaking, weaker. It was not even able to go positive, and you've got this $6 wide trading range, support, choppy action, but generally support here at 112. You got to get above 112, 112.50 and hold it. And I think a big level is going to be here at 115. We talked about that yesterday. That's the midpoint of this large volume over price bar. But what I would do is, if you sense a green day happening, buy 112 and see what happens. You might get a move up to the top of the box at 118, where there's a gap to fill up to 120, and then you got resistance at 121. Google filled the opening gap, moved into the old trading range from 97 to 100, and then you had two candles reach. Actually, what was the high? The high was 99.78. So whether you want to call that the top of the box, or you're going to wait for 100 on the button, that's fine either way. To keep this thing going, you need a breakout above 100, and then your target would be 103, just like what happened over here. Breakout above 100, went right up to 103 where it rolled over. So you got to see 100 taken out. Wild action on Netflix yesterday. We undercut this whole line of lows here. We actually talked about these lows the other day. You had support here, support all in here, and then you get that doomsday open, right? Went down and tagged 212. And then the reversal was a foot. You could have bought 215 right here at these lows. You certainly could have bought the move into the gap here at 217, and then it was right on up because each of the levels of importance were already on the chart, right? 220 was important because of this large volume bar, support, undercut, recapture, more or less support here. We had the line in there. That was a place to buy. Same thing with 224, same thing with 228, support, etc. Great move. Now, the whole thing is about 234, and not going to beat a dead horse. We've covered this chart a lot in recent days and weeks. 234 is your major pivot line all across this chart. Big line of resistance, big line of support, big line of resistance. If you get a break above 234 and you're not in it, I would be a buyer there. If you somehow got this, first of all, congratulations. That was a great trade. But second of all, if you have not rolled up, if you have not gone to the bank, you got to go to the bank right here. Why? Because you're at key resistance. And at that point, you either roll up and have confidence of a breakthrough, right? To roll up to an at the money strike, or you simply take it off, right? You go to the bank and then you wait for price. Now, what you could also do, and it's certainly objective, if you see a rug pull developing, that's your stop. If you want to get short above, if you want to short 234, then above that is your stop. Because remember, we had a back touch here of the triangle that failed, and now we've come back to both lateral resistance, that's your line across the top, and triangle resistance here, and they both intersect in the same place. So objective to short, but if there's a green day, if there's a follow-through day, I expect this to break out and at a minimum fill this gap here. And then if it's going to reject along this line of 240, 241. SMH, big move off the low, 167.50, going out at 182, 181. But still, if you didn't get the gap fill, recapturing 175 was key, and now we've built a little flag. I think the big moment of truth, and that's why I've got the main pivot there, is 185. Why? Because that's the $10 wide trading range, and you've got resistance there. So if you look at a measured move, if you call this a bull flag, which it certainly looks like, you got the flagpole. Here's the flag. And then you get the measured move. And just eyeballing it, it would look like you could get close to 190, 192.50, 195 in that area. So, yeah, I like it. I mean, they're all going to move together. I doubt you're going to see, semis fall apart while everything else is fine, dandy, and racing higher. I think they're going to move together. Now, whether they move as much or, stronger or weaker in relative terms, that's hard to tell. But I don't think you'll see an isolated move in something like semis. ARC was a surprise in that it really didn't do anything. I mean, finished flat on the day. So right here at the pivot point, 15. ARC G right here, 31.50, remains the pivot. ARC K, 36, undercut and recaptured, but basically closed unchanged here at 36. That remains your pivot. ARC W had a comeback, but already has broken down. So technically speaking, that was it was positive from the standpoint it didn't go lower, but it really didn't create that much positive action. If you get a green day and you get a back touch here, that's your classic breakdown back test and then fail. So I think ARC W is still worth watching for a potential entry at a certain point. Energy did great yesterday, and one of the things that I was looking at was on those opening doomsday bars, right? A lot of these and other energy names were barely red, and they were one of the first groups to go from red to green, and that's always a positive sign. So here's Refiner Dino right here at the breakout level, 57.50, 58, wherever you want to call that. Came down to the 20 where it held and then bounced back up. PBF, another refiner, nice breakout, challenging the prior high right here at 44. Phillips 66, breakout from 94 with the prior high up here at 108 targeted. These are all names that we talked about, in the last however many days. Maybe it was the end of last week, I'm not sure. But these are certainly moving in the right direction. Valero, not as close to the highs as the other ones. The ones we just talked about are either breaking out or very close to it. But here we've got a trend line breakout above 117, and then you've got a prior high right here at, let's call it, 125 on these touches. You break that, then you got an open door to 142. So whether you want to be long against 117.50, if there's some weakness today and you get a pullback, I would be a buyer there. If you get a breakout above 125, I'd be a buyer there with a stop below. Want to hit some of these integrated names. ConocoPhillips, taking out the high, going for higher ground. Chevron, triangle breakout. Looks like it's taken out the prior high. You can see this value range that comes across here. I should have marked that in there. Let's call it 167.50, 170. You can see the big value range. You can pick that off on your charts, but nice breakout there. Hess, another nice chart. Big cup and handle right here, ready to break out at 128, 130, wherever you want to call it, right across the top. That would bode really, really well. And remember, I think the thing that's really interesting about these charts are twofold. Number one, we know the broad market has been in disaster mode. I mean, all the charts that we just looked at on our daily matrix, all of tech is in confirmed downtrends. The market as a whole is in a downtrend. Oil has been in a downtrend. We recently broke out, but we're $30 off of the high, and yet refiners near their highs, near their 52-week highs. These integrated names, 52-week highs where oil is $30 lower than it was back here. So, those are hugely bullish signals. Here's MPC, another refiner, making a move back to the highs. Let's see. Got to throw Exxon up there. I'm still in October 100s that expire next week. I'm down on that. If you bought those and you didn't stop yourself out on this, you're still underwater. Need the breakout. Pure and simple, need a 102 breakout to get this thing going, and then we'll be in good shape. But it really can't play around too long. So some very dynamic charts there. I'm running long on time, a lot to go over. I hope you caught yesterday. I had, not yesterday, but the day before. So that would have been Wednesday. Tough day of trading, man. I said in the trading room, they may be only paper cuts, but if you get enough paper cuts, you can bleed out. Just a figurative way of saying, tough day in the trenches. You get stopped out. You think it's going to break out. It pulls back. You get scared. Whatever mechanism of having a bad day. I had a bad day on Wednesday, but yesterday I fixed it. And that's where you got to keep your head about letting the prior day go, and then using your TA skills and principles of buying when you're supposed to buy, going to the bank when you're supposed to, and then the price action has to do the work, right? You're not doing the work. You're making the entries and the exit, but price has to do what it's supposed to do. And yesterday it did. There was a strong reversal. It kept recapturing prior resistance points. And then that makes your job easy as a trader, because it hasn't given you any reason to waver. So for today, will be really interesting to see if we get some follow through. Watch those last 2 hours of trading into the weekend. Those are often a tell on sentiment. So let's wrap it up there. Let's see how this thing goes. This has been Chris Best with Traders Profit Compass. Have a good day of trading, and talk to you next time.